try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We gotta add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been getting bigger. Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest in everything Bitcoin and cryptocurrency. And in today's episode, we are going to be talking about a drop on Bitcoin that has begun over just the last 24 hours. As you guys know, Bitcoin had a major drop to around $25,600 last Friday, creating a new market low that we have not seen in over 2 months. But now, following the bounce that occurred over the weekend, Bitcoin seems to be dropping again, begging the question, is Bitcoin about to go all the way back down to the key level of support at $25,236? We're going to be taking a look at the technical analysis on the Bitcoin and cryptocurrency market right now, and we're also going to be taking a close look at CoinMarketCap, looking at the dominance of Bitcoin, and also answering your questions about where Bitcoin is going, and seeing if there are any kind of trade setups that we can find in this current market structure to maximize profitability here at this point in time in the cryptocurrency space. Guys, I'm very excited to bring you Coffee and Crypto today. If you guys don't know, we've been doing Coffee and Crypto Live 5 days a week for over 2 years now. We've been uploading content to the YouTube channel here for nearly 6. First video went up November 16, 2017, and from that day, starting about a month after that, moving into December and January 2017, January 2018, I started making a video every single day, and I made about 1,000 videos in a row without missing a day. Intentionally, I would miss a day every once in a while if I was like deathly ill. Took a couple of days off here and there, but for the most part, I made about 355 videos a year. I would take no more than 10 days off a year, and I loved it. I loved then and now coming before you guys daily to bring you guys content here on the cryptocurrency market. So if you want to join one of the oldest YouTube channels in the cryptocurrency space, make sure to hit that like button, subscribe to the channel, hit that post notification bell so you won't miss a single beat. Thank you for tuning in, and thank you, Rocket Metal News, for saying good morning. You were also first, so shout out to you, my friend. Crypto Trappa in chat gave us the 3 rocket emojis. We got Sean O'Brien here, said, hey, Sean. How you doing? We got Queen in chat. Alex Nybo. I'm my hero, said, sup, homies. What's up, man? Sky in the ceiling, how you feeling? Crypto Trappa said, good morning. Crypto Surge, finally got your name right, said, good morning, Jebb. Have a wonderful day. Thank you. Thank you. I receive that, is what some people say. I would love to have a wonderful day, and we always have a wonderful day full of joy when we are trusting in our Lord Jesus. Queen is in chat, said Bedrock present. Joe Bollier said, good morning, Jebb. Grand Roofing Incorporated. I'm sorry, I haven't done that in a long time. I thought I'd just have to. It was in chat, said, good morning, Jebb. The Drake Equation said, good morning, Jebb. I'm still wondering if you have found out how much alien life there is in this galaxy. We're going to drink our coffee and ponder that question. I'm sure all of 2 nerds in the chat will have gotten that reference in his name. Philly Skills 1428 said, so close, but it's all good. Crypto Surge said, Bedrock. Crypto Jeeb said, good morning, everyone. Thank you to him for saying good morning. Let's see. Denon Merlot said, yo, Crypto Jebb, are we going to go to the moon soon? Well, we're hoping that the that the Starship will be powerful enough that it won't explode about 50,000 feet above Earth's atmosphere, and it'll actually be able to carry humans to the moon. I'm sorry, you meant Bitcoin. Okay, yeah. Well, they're probably both on about the same timeline. Probably the next year or 2, they'll be carrying something to the moon. Hopefully, Bitcoin will be going to the moon moving into 2024, 2025. Because let me just break something down for you. We talked about this in office hours last night. By the way, recorded office hours last night. So if you're in Club DeFi's Principles of Technical Analysis, go to the first post, not even a video, it's a post in Club DeFi's Principles of Technical Analysis. Join the Discord server and stay tuned because in the next 24 hours, I'm going to have that uploaded and over there in the Discord so you can go back and watch office hours if you missed it. But in office hours over in Club DeFi's Principles of TA last night, I talked about how 2015, 2019, and this year, 2023, all have a lot in common. All of them are the year before the halving. 2016, there was a halving. Bitcoin's block reward dropped from, 25? Yes, from 25 down to 12.5. That was May 11th, 2016. You can go back on your charts and check that. May 11th, 2016, the block reward was cut in half, went from 25 to 12.5. Obviously, that drastically reduced the incoming supply of Bitcoin, changing the deflationary disinflationary mechanics of Bitcoin, leading Bitcoin into a giant bull market. Same thing happened 2019. Bitcoin was doing stuff. It rallied a couple 100%, dropped another 50%. Wasn't really sure what it was doing with itself. And then 2020 came, and of course, the pandemic hit, so that changed things as well. Initially, that was very bad for the economy. Later on, that was really good for the economy for a couple of months. Massive amount of quantitative easing came in, moonshot Bitcoin up to $65,000, then on to $69,000. But actually, what was it May 11th that year? Maybe May 11th that year, actually. I think it was June 19th. June 16th. Might have been June or July 16th, something like that, 2016. In 2020, I think it was May 11th, 2020, actually, when the halving took place, Bitcoin skyrocketed. 2019 was this whole just listless, confusing, awkward year. It was like Bitcoin was going through puberty again. It just didn't know what to do with itself. Its voice was cracking. It was going up and down, and just nobody knew what was going on. It was hormonal, smelly. It was bad. It was like the middle school boys' locker room. It was just confusing and kind of gross. And that's what 2015 and 2019 was for Bitcoin. That's kind of what 2023 is shaping up to be for Bitcoin right now. It's rallying, but we're just confused. We don't know what we're about. We don't know whether this is a bull market, not a bull market. We're not confirmed. We don't know whether we're going up, we're going to go down. We don't know if we're going to go to 15 or 35. There's just confusion. This is always the way that it is the year before the halving year. The halving year is next year, because the next halving is happening in April of next year. And when that halving occurs, that will likely send Bitcoin to the upside. Not so much the halving sending Bitcoin to the upside, but the 4-year market cycles that was originally built off of the halving structure will send Bitcoin to the upside. What do I mean? Well, the halving going from 6.25 Bitcoin per block down to 3.125 Bitcoin per block coming during the next Bitcoin halving is not going to change the inflationary and therefore the increased disinflationary mechanics of Bitcoin all that much. But what will happen is that it will show us the 4-year cycle of there's a halving every 4 years is still intact, and that will likely send Bitcoin to the upside. Long story short, because sometimes I like to make a short story long. Long story short, Bitcoin is likely to go through a very large rally next year. This is a year of preparation. I suppose I could have just said that at the beginning, but sometimes I think you guys come for all the extra details. Let's see. Crypto Shady, friend of Yahweh and Yeshua, said, "Salute, Jebb. Jesus is Lord. Be blessed. Amen." Just Ray is in chat. I suppose I should just call him Ray because his name is Just Ray, who is a member, said, "Afternoon, Jebb. Break a leg. I would rather not. I've broken this thumb. I've broken 2 toes in my left foot, and I've broken my arm. I think I'll pass on the breaking a leg thing. I've broken enough bones in my life." Grand Roofing Incorporated said, "Lol." All right, guys. Let's go ahead and jump straight on over to CoinMarketCap. Enough rambling. Let's jump into it. Right now, Bitcoin is trading at $26,984. It's down 1.2% in the last 24 hours, and it is down 2% in the last 7 days, up 20% in the last 90, and up 60% year to date thus far. Why is this important? Bitcoin is in a massive sideways consolidation and has been for the last 2 months. Bitcoin has been trading sideways with absolute aggressiveness. Bitcoin has been aggressively patient. You know, there's a principle in business that a great entrepreneur once taught me. To be successful in business, and I would say successful in anything, you have to be what he called aggressively patient. And tell me in chat if you know who said that, because a lot of you guys probably do know who I'm talking about. And I'll give credit where credit's due here in a minute. I just want to see if you guys can guess it. They said that you have to be aggressively patient. And what that means is that you have to be so patient. You have to be on your A game. Like, I'm gonna be patient for days, weeks, months, years. It's a very biblical principle. Patience a lot of times isn't just something that you have to be for 2 hours. Oftentimes patience can transform into endurance, and you have to be very, very durable so that you have the endurance to be patient over a long period of time. That's what Bitcoin's doing right now. Bitcoin is being aggressively patient. I'm not against it. Bitcoin trading sideways here, falling below this uptrending level of support, even falling below its 50 daily simple moving average, as you can see right here, and then testing it as resistance yesterday, rejecting from it. None of these things are definitely, categorically bad things. All of these different things that Bitcoin is doing, all these different events that Bitcoin is taking place, that Bitcoin is partaking in, could very well happen to Bitcoin in the middle of a bull market, and very well have happened to Bitcoin during a bull market. Let's just look back to 2015, 2016, when Bitcoin was just starting its bull market. Bitcoin aggressively traded sideways. twice. Once down here between $200 and $400, and then once here between $350 and $500. And then if you move forward, Bitcoin actually did it again. Traded aggressively sideways between 550 and 800. That was the majority of that was the first third anyway of the time during the bull market. If you call the bull market starting, let's say, I normally call the beginning of the 2016-17 bull market around October 15th. Very large number of reasons for that, including RSI, MACD, moving average the convergence of moving averages. That's why that threw me off. The way the moving averages crossed each other. Bitcoin would go into an 800-day bull market. You can see the middle point of that bull market's right here. By the time we got to the middle point of that bull market, it's going to disappear, but just look right here. By the time we get into the middle part of this bull market, right in this area, Bitcoin had spent the first half of the bull market trading sideways with a couple of massive legs to the upside. Notice that. Bitcoin went through a 100% rally here and then traded sideways for over 6 months. Then Bitcoin went through an 80% rally here and then traded sideways for over 6 months. Then Bitcoin started this cycle of going up and then having small corrections and up and small corrections, up and small corrections, up and small corrections. The beginning of the bull market was characterized in 2016 by stair steps, not by just this vertical line. This line goes up over the course of a couple of years. That was the second half of the bull market. That was the back half of the bull market when we had more consistent entries into the space from different liquidity, such as retail and institutional. We saw the similar thing happen in 2019. Remember how I said 2019 was that really awkward year here for Bitcoin? That's where we are right now. The halving took place right in here, May 11th, 2020. I actually do have it on my chart. May 11th, 2020. I was right. It was May 11th, 2020. But the year of 2019, which is the year that we're analogous to right now, we went up and then we traded sideways. And Bitcoin not only traded sideways, it corrected hard. If you remove the black swan event of the pandemic, I almost got myself in trouble by saying the name of it. If you remove the black swan event of the pandemic right here, then Bitcoin went through a 200% rally, more or less, and then traded sideways for a year and a half, or a year and 3 months anyway, about 15 months. And then you know what happened? Bitcoin ran pretty much the entire bull market from $10,500 all the way up to $65,000 in 7 or 8 months. That's where I want you to understand that the aggressively patient mentality of this market right now is not a bad thing. In fact, it is absolutely characteristic of the year before a halving that Bitcoin would have this stair-stepping pattern where we rally and then we trade sideways, and rally and we trade sideways, where we have most of the gains happening in a few weeks, and then we trade sideways for months, if not over a year, to lock in the gains. If we look at the VRVP, we're going to be able to tell that Bitcoin is doing just that. It is building strong foundational support for the next bull market by trading sideways at these regions. As you can see, with Bitcoin trading above $15,000 to $17,000, between its local bottom around $15,500, moving all the way up to where it's trading at $30,000, all of this trading in this area has built up huge VRVP support. Don't believe me? Look at VRVP if we take this off. If we take away all of that price action, look at how much smaller the VRVP is right now compared to if we go ahead and bring the chart back and we look at it with all of this trading. There's a huge difference, especially in this blocked range between $26,000 and $30,000. We are gradually, slowly but surely building a massive level and zone, I should say, of support that Bitcoin will be able to hold moving into the future. And that's exactly what we saw happen in 2015 and 16 when Bitcoin came in and built these massive blocks of VRVP support here in between 300 and 500, and then again between 550 and 800 that it would later use as support. And that, by the way, Bitcoin would never need to go back test ever again. We never went back to those levels ever. Now Bitcoin is doing a very similar thing. Bitcoin is building foundational support here above not the last bull market, but the previous bull market's all-time high. We just go to a clean chart really quickly. I know I have one of them. I clean my chart once every 5 days. Let's see. Remove those 3 drawings. If we go back to $20,000 here, Bitcoin is now coming in and building strong foundational support in this zone right here that it did not have the ability to build during the 2021 bull market. Why? Because Bitcoin moonshot in 7 months because of the huge amount of quantitative easing. If you guys don't remember, let's just go and add the United States Central Bank balance sheet, USCBBS. Take a look at this. the balance sheet moonshot as soon as Bitcoin crashed. And that led to the quickest recovery that Bitcoin has witnessed perhaps in the history of its entire market, certainly by a market capitalization standpoint. During that time, Bitcoin would be in a bull market the entire time that the printing was occurring. The printing stopped right here in March of 2022, right around the time that the Russian-Ukrainian war occurred. The printing stopping, the effective federal funds rate hiking, as you can see right here. And as I said, the war in Ukraine. And also, let's just go ahead and give the full gambit here. The SPY starting into a downtrend, pretty much the same couple of months that Bitcoin did. All of that locked in and guaranteed the bear market, on top of the fact that we were witnessing the market move into the period of the 4-year halving cycle where it should be going into a bull market. All the cards align for a bear market to occur right now, and all of them are shifting. The balance sheet is now declining, which means that at some point they're going to stop the decline and they're going to start rallying it. They're going to start printing money again. That might be a year, that might be 2. But if it happens in 2024, 2025 is going to line up perfectly with the halving cycle. The stock market, when that occurs, is likely going to go through a huge rally. Not sure where my SPY went. Let's bring the SPY back up. The stock market is likely to go through a huge rally. You can see the stock market has mirrored Bitcoin almost exactly. Let me just remove everything but the stock market. This is the SPY. Just take a look at how closely these are correlated. Bitcoin is trading like a tech stock. All right? It's trading like a tech stock with very stable fundamentals. And there's a certain allure to that. I mean, Kevin O'Leary has been on this channel 3 times. Kevin O'Leary has talked about that. Bitcoin is very much like technology, and that's the way the average institutional investor from Wall Street views it. And so it stands to reason that it's following the stock market. Stock market's doing well, Bitcoin's doing well. If stock market's not doing well, then Bitcoin's not doing well. The stock market's going to go through a rally in the next 2 years. You think the Fed's going to let the stock market not go back to all-time high for another 2 or 3 years? Of course they're not going to do that. Their jobs rely on the stock market rallying. Their jobs rely on people believing that the United States economy is healthy. And one of the ways that people judge whether the state's economies are healthy is whether or not the stock market is hitting fresh highs. Is that healthy? No. Is it reality? Yes. And so with Bitcoin trading sideways here, it is building in the short term very strong support, and that's something that we ought to be thankful for. In the medium to long term, there are a multitude of things coming together in convergence that will send Bitcoin into a major bull market. Let me just run through them very quickly. Number 1, we are going to see a halving take place. Most people are predicting April of next year. Let's just see when some of these calculators are calling it right now. Believe they're calling, let's see, the Bitcoin halving clock, which you guys have seen me use quite frequently right now because it updates. They have to change it every once in a while. It's calling for April 7th, 2024. That is less than 365 days from now. So we've got the halving coming up relatively soon, in less than a year. At the same time, by that time, the effective federal funds rate is almost certainly, let me just be very clear on this. The effective federal funds rate will, I will give you a 99% likelihood on this, will be paused. It will not be hiking anymore. The Fed is not going to send interest rates to 10% in the next year. They would crash the economy. The amount of rate hikes that they've already done is the fastest rate increase that we have seen in 40 years. The effective federal funds rate has hiking that aggressively actually is kind of a good sign because it shows that the Fed is willing to hurt the economy short term for the betterment of the long-term economy. That's a good thing because we've had an overly dovish Fed that is not willing to do what it takes to get the United States dollar under control, even if it causes pain in the short term. But they didn't have a choice this time because they doubled the balance sheet and added $5 trillion to it. Don't believe me? Check the chart. Take a look here. United States Central Bank balance sheet. You can see the scale for it is the rightmost one right here. Was sitting at $4.138 trillion. It went in the course of 2 years to $9 trillion. In 2 years, the Federal Reserve's balance sheet increased more than it ever had in the history of the United States Federal Reserve. And so now they're trying to get that under control by, rolling off treasuries and mortgage-backed securities. They're trying to get the inflation that caused under control by increasing and hiking the effective federal funds rate, which is currently sitting at 5.15%, according to the according to the statement from the last FOMC meeting. So, backing up, why do I mention those things? Number 1, you are going to see the halving come in around April 7th right now. Probably a little sooner, maybe late March, early April, somewhere in that range, 2024. When that occurs, Bitcoin is likely going to begin going through an increased bout of bullishness because there is this pattern in the history of Bitcoin that Bitcoin goes through major rallies whenever the halving takes place. That being said, I don't think the halving itself is actually going to be the driving force of that rally. I think at this point, the historical trend of going through a rally every 4 years is going to be the driving factor. Guys, dropping the Bitcoin block reward from 6.25 down to 13.125 is not going to do basically anything to the economics of Bitcoin. This is not dropping the block reward by 12.5. This is dropping the block reward by 3.125. So in 2016, we dropped the block reward by 12.5. Right now, we're dropping the block reward by 3.125. If you haven't noticed, that is exactly 1/4 of the size of that drop 8 years ago. It's exactly 1/2 the size of the drop from 12.5 down to 6.25 that we saw in 2020. This block reward is the first one that's not going to have that big of an impact on Bitcoin from an actual supply and demand economic side of things. That being said, the other thing to keep in mind is that 92.26% of Bitcoin's total maximum supply has already been mined. The last 1.5 million Bitcoin will be mined over the next 116 years. That is an average of less than 1/10 of 1% of the maximum supply of Bitcoin being mined every year. We're going to see the total circulating supply at about 19,500,000 by the time the block reward gets cut in half again. This will be the first, and really this will be the first of the non-important halvings and the last of the important halvings, if you get what I mean. It'll be the last one that really actually has any substantial impact on the supply and demand side economics of Bitcoin, and it'll be the first of the ones that don't matter. That being said, it's the transition halving. That being said, the pattern that the halving cycles every 4 years put into Bitcoin, I think is alive and well. I think people are absolutely ready for a 2015, a 2019, a 2023, a 2027, a 2031 to be that kind of awkward year for Bitcoin before the 2016s, 2020s, 2024s, 2028s, 2032s are the massive bull markets. I think to get rid of the 4-year cycle for Bitcoin is going to take decades of maturity in the cryptocurrency space. It's not something that's going to happen anytime soon. I think you're going to see Bitcoin gradually move out of this every 4 years we go into a bull market and then we go into a bear market the year and a half later cycle into this kind of just general uptrend, kind of like what the stock market does. So long as Bitcoin remains healthy, so long as it reaches a certain critical mass of adoption, which I think it kind of already has, but especially that it needs to develop in the next 5 to 10 years, I think that's where you're going to go. In short, 4-year halving cycle is going to be very important. Next year, that will drive bullishness. Second, we're going to see the effective federal funds rate almost certainly plateaued come April 7th of next year when we see that having come into play. In fact, if we go to CME Group right here, you can see right now they're predicting that a pause is coming next meeting on June 14th with a 78.1% certainty that there will be a Fed rate pause, 21.9% certainty that there will be a 25 basis point rate hike. By the way, I love how they set up their chart here. I just love this. This is a case study in technical analysis right here. What do I mean? Any good technical analyst will get in trouble for this from the mainstream, from the retail, from anybody listening to them. A technical analyst doing his job will get in trouble for what I'm about to say he should do. What do I mean? Well, the CME Group is doing it here. They're saying these are the two possibilities that we think are on the table. Either a pause or a 25 basis point rate hike. They're not even including a rate drop because it wouldn't make much sense that the Fed's going to drop rates when the inflation only went down by 0.1%. They're raising rates to combat inflation. The market, the jobs market is relatively stable, so they can afford to do another 25 basis point rate hike. They're not even considering a 25 basis point rate drop. And Jerome Powell said that they're considering another rate hike. They just haven't decided on it yet. They basically need to look at incoming data. That BLS CPI data was very much the data they were looking at. That's why I think it's possible they see another 25 basis point rate hike. What the CME Group is doing here is they're saying these are two possibilities. We're going to ascribe a percentage to them. That's what I do when I give you guys some kind of decision or some kind of setup for what the market's going to do. I say, obviously, it can go up or it can go down. Obviously, it can go up, and I get in trouble for this all the time. Technical analysts get in trouble for this all the time. Honestly, this right here is why a lot of people don't think technical analysis works. They don't understand this one fundamental thing, and they bash technical analysts for it. I'm not getting defensive. I can take it all day long. I'm just letting you guys know that when you're doing technical analysis, people are gonna come at you with this. Oh, so it can go up or it can go down. Well, I mean, the CME Group right here is saying, well, it could move sideways or it could go up. So what? Should we completely disregard what they have to say here? No, because the information is not in the options. The information is in the likelihood. Do you see what I'm saying? We're not just like, cover your screen. I got my hand right here. Just cover your screen and just look where it says 500 to 525 basis points or 525 to 550. These are our two options, and it could do either one. You're completely disregarding that the information is in the bar chart. What's the likelihood? The likelihood is that there's going to be a pause according to them. As a technical analyst, and this is off topic, but I'll let you know anyway, as a technical analyst, your job is to say, yes, obviously it could go either direction. Where the analysis is giving me an answer is it's giving me confidence that Bitcoin will go in one direction with more likelihood. You were trying to figure out, is Bitcoin going to go up with a 75% likelihood, or is there only a 25% likelihood that Bitcoin will go up? Where will it go to? What is the likelihood that it goes to this level, or this level? Technical analysis exists in the realms of likelihoods. Why? Because markets are the manifestation of the machinations of the traders. That's one of the parts of the definition of technical analysis that I give you in Club DeFi's Principles of Technical Analysis. Markets are simply the manifestations, otherwise known as the consequence of the machinations, otherwise known as the thoughts, feelings, emotions, what have you, of the traders. And the of the traders part means that the traders are the ones that are doing the thinking, and therefore their thinking is manifesting themselves in trades which move the market. As an analyst, you are dealing with people. Even if you are sitting in your mom's basement, or you're sitting in an attic somewhere, or you're like Crypto Mini Bike, and you're sitting on your little house, your little log cabin that you built out on this field, and you've got a mini, which is just awesome, by the way. Shout out to him. He showed me that in Club DeFi's Discord server. Make sure you join Club DeFi. Go to the Discord server. It's worth it just to see the pictures of the house he's building. It's really cool. So if you're like him and you're sitting out in the middle of nowhere and you've got this awesome little house that you're building and you rode to it on your little 125cc mini bike, and you're doing technical analysis, your job is to come up with percentages. Your job is to come up with likelihoods. Your job is to say, there is a 73% likelihood in my mind based on this analysis that Bitcoin will go here. I'll get off my soapbox, but there's a definition. My point was, that you're dealing with people even if you're in your mom's basement, even if you're in the middle of nowhere, even if you're on top of a mountain, you're dealing with people because the markets are the consequence of how people think. They're also the consequence of how trading bots think. So you got to keep that in mind too. But trading bots oftentimes are complicated enough at this point that they almost have their own thoughts. They're not sentient, but there's certain things that are making them think a certain thing. Again, I'm not saying that the bots are sentient or human or have souls or spirit or any of that, but they do kind of think in a certain way. In their weird brain, in their weird robot brain, they think in a certain way, the same way the YouTube algorithm does. So you need to think about this from a relational standpoint. Now, we've already touched on the halving. April 7th next year, the halving will take place somewhere around there. We can't predict the exact time because it has to do with block times and difficulty in mining and all that. Around April, maybe late March of next year, we're going to have the halving. At the same time, the effective federal funds rate is likely to be paused. Taking a look at CME Group here, go to December 13th. CME Group is giving it a 38.8% likelihood that we will have dropped the effective federal funds rate by 75 basis points and a 36.8% likelihood that we will have dropped it by 50 basis points by the time that we hit December 13th, which would still be 3 months before that meeting. They give it a 1.6% likelihood that we are still at this level and only a 0.1% likelihood that we are any higher. They're expecting with great certainty, with great confidence, that there will be a drop, and come March 20th, of 2024, they're expecting with a 36.7% likelihood that the effective federal funds rate will be a full 1% lower than where it stands right now in a decreasing rate market when the halving occurs. That is the similar setup to what we saw come last bull market in 2020 and 2021 when the effective federal funds rate was 0. The balance sheet was not shrinking, it was actually growing, and the rate and the halving had taken place. That was the kind of perfect storm. We're setting up for that same perfect storm where the effective federal funds rate is not 0, but it's coming down. It was 0 back then, and it did come down because it was at 1.5%, and then they dropped it when the pandemic started. So it actually had just come down when the bull market started, similarly to how we'll see next year. And again, by about 1 to 1.5%, because it was sitting at 1.5%. We saw the quantitative easing come in, which led to a massive amount of bull market. We'll probably see the QE, the QT, the quantitative tightening, slowing down by the time that we get to the next bull market, maybe even turning around into more QE. We don't know that. That's a little bit harder to predict. And we'll see the halving come into play. All of that's likely going to lead to a major bull market coming April of next year. But wait, Billy Mays here. There is more. Taking a look at our chart here, I also want to show you the SPY. The SPY went through a huge drop when Bitcoin did. Bitcoin correlated in its drop following the pandemic when we had the lockdowns begin late January, early February, when the pandemic started taking off. The stock market went through a major rally. Why? Well, because if you remember to what I was saying, the effective federal funds rate dropped off a cliff. It was sitting at 2.25%. It had already dropped, which was already baking in some bullishness for when the bull market came. And by the time the pandemic happened, it was at 1.5%. They slammed it to the floor. We dropped 1.5%. We're saying by the time the next bull market comes, we might see another 1% to 1.5% drop at the same time. That correlation is likely going to help with the bull market. But also with the stocks going into a rally, that helped Bitcoin to move to the upside aggressively. Now, stocks mostly rallied because the balance sheet rallied. But the balance sheet not rallying, but just standing still would be enough for the stock market to go through a major rally and probably return back to all-time high. You heard me right. If the effective federal funds rate pauses and turns around, and starts moving to the downside, and the balance sheet just stops tightening or even slows down its tightening, if they slow down from $95 billion a month, rolling off, $60 billion in mortgage-backed securities, $35 billion of treasuries every single month. If they roll that back to maybe $30 billion of mortgage-backed securities and $17 billion of treasuries, that'd be $47 billion, cut it in half, $47.5 billion, cut it in exactly half. Even just that, and the effective federal funds rate pausing and turning around by 1% would be enough to send the stock market into a rally, breaking some of its critical resistances. You can see those drawn on this chart here. Let me just go ahead and delete this. You see there's a big level of resistance at 417 we're hitting our head on. There's this downtrend right here. Just pausing the effective federal funds rate would likely be enough to send the stock market through a small rally, which would send Bitcoin through a small rally. All of that to say, come April of next year, you're going to have the halving cycle coming in to give you bullishness. You're going to see the effective federal funds rate coming in to give you bullishness. It's very possible also that you're going to have the balance sheet coming in to give you bullishness. On top of that, you're likely going to see the stock market coming in to give you bullishness. On top of that, if we bring up the Dixie, because the Bitcoin market is highly inversely correlated to the Dixie may be going through a rally, but considering the effective federal funds rate is going to be plateauing and dropping, it probably won't be. Because Bitcoin, and the reason why is pretty simple. The United States jumped the gun on everybody else by raising rates. If you look at the Bank of England, if you look at the Canadian Central Bank, I think is what it's called. If you look at the European Central Bank, the ECB, the European Central Bank, many of these major sovereign currency banks started hiking interest rates after the United States dollar, and they have hiked the interest rates a little bit less aggressively than the United States dollar, which means that the U.S. dollar which means the United States federal funds rate is likely going to pause first, which likely means that the Dixie is going to lose some of its strength when the rates pause, because the rest of those nations are going to still be increasing their rates, which means that those currencies under those increasingly tightened rate conditions will likely go through rallies, which will cause the Dixie to go down because the dollar will be relatively losing a little bit of strength. I'm not sure that we're going to see a massive crash on the Dixie. Just going over to the Dixie's chart, which again is the dollar currency index. This measures the strength of the U.S. dollar against a basket of other national currencies. I don't expect necessarily that the Dixie is going to go through a giant crash, but it's possible. The Dixie's been in this giant trading channel for 2 decades. It's possible that the Dixie could drop all the way down here to 96. If that happens, that's sending Bitcoin to all-time high single-handedly. And a lot of that's going to line up, again, as I said, where's my chart? I have 5 charts for Bitcoin. Right here in Q1, Q2 of next year. So all that to say, Bitcoin is and I say all of this because I wanted to talk about how Bitcoin has the worst yet to come. That's what the title is. But I want to spend the vast majority of this stream preparing you for what happens after that. Because I don't in any way want to just freak you out and make you think, oh my goodness, it's game over. It's absolutely game over. So with all of that in mind, let's look at the shorter term time frames. Bitcoin on the shorter term time frames is likely to go through an increased correction. I don't think the shorter term time frames Bitcoin is going to. I don't think that it's going to go through a major rally right now. I think what's going to happen is that Bitcoin is going to pull to the downside, rejecting off of this downtrending level of resistance that you can see right here. Let's just draw this as accurately as we can because it needs to be drawn accurately for me to make this point. I think Bitcoin is going to continue below this downtrend right here. This is constituted by a high here on April 23rd. At $30,000, a high right here at 28.2 on May 10th. When the CPI data came out, Bitcoin tried to rally and failed miserably. And then also a high that was set here at 2 p.m. yesterday at $27,600. Bitcoin is basically setting a head and shoulders pattern in motion here. It tried to bounce when it dropped all the way down to 25,800 because there is a lot of bullish strength down there, but there's just also not much bullish strength up here. There's this kind of void where there's a lot of bullish strength right here between 25.2 and 25.8, but there's not much anywhere above it. So that causes this suction where the bulls just kind of suck the market back down towards 25,236 because they want to accumulate down there. I think a lot of people want to accumulate down between 24.2 and 25.2. And those people that want to accumulate down there are not willing to buy anything above that, at least not much above that, because they feel like the market's going to go down that far. Remember, technical analysis is the art, not the science, of understanding and reading what the traders are thinking so that you can understand how their machinations lead to their manifestations here in the market. What it seems like the market is showing us right now are that the traders are willing to buy at 24.2 to 25.2, but they're not so much willing to buy above that, or else we'd be in a rally. What that shows us is that the traders are thinking, we're overextended, we need a small correction here, and then we'll buy on a discount. Because we're already so close, why not just wait for it to get the discount? People are thinking, okay, Bitcoin's in this bear trend right now, it's so close to the end, why don't I just wait and get a better deal? And so if Bitcoin drops down to 25.2, it'll likely get bought up pretty quick. But I don't think that it's going to be able to just go into a big rally without going down there again. It certainly, to me, seems like the liquidity is down there, and that's where the buy walls are. In effect, I think we have some pretty large buy walls right here, and not many buy walls right here, meaning that if the bears try and attack us, the bulls are likely going to fail, and Bitcoin's going to drop another $1,000 or so, $1,000 to $1,500, and then it'll get bought up. At which point in time, you could start buying, and you might even consider entering a long trade. I'm not going to set up a trade like that for you just yet. I think it's too late in the game to try and enter a short. You're already 66 to 70% of the way through this corrective movement. I think it's very close to the end in both time and price. I think in the next 2 weeks or so, you'll see the bottom coming in. From there, though, we can start looking for confirmation and say, okay, when this happens, we can go into a long. When this happens, we can go into a long. When this happens, we can go into a long. And you guys can stay tuned for that. Lux Algo is definitely going to be a big part of that. Lux Algo's price target right now for its downtrend, for the sell signal that we saw come into play on Wednesday, April 19th, was starting at 25,800. That's exactly where Bitcoin went to, almost to the dollar. But there is a whole zone down here, and a lot of times Lux Algo will show that the market goes at least into the first take profit zone. I think you are going to see Bitcoin hit 25,236 relatively soon, unless we see some major bout of bullishness coming out of the market for some reason that we can't foresee, having to do with news or what have you. It could be some kind of black swan that would be bullish. We don't know exactly what it is. I don't think there's going to be anything major coming out relatively soon to send Bitcoin into a major rally, but we will definitely keep you guys up to date. So there's my prediction. I think you're going to see a drop down to 25,236, but I also think that the next year is going to be very bullish for Bitcoin. I think this is a bit of a confusing year for Bitcoin. 2023 is just one of those years of like, just not really sure what's going on. Is Bitcoin in a bull market? Is it not? I don't know. We've got a lot of people waiting on the sidelines to put money in, but they're not putting money in for a year. All right, we've got billions with a B, tens, hundreds of billions of dollars sitting on the sidelines waiting to deploy. At least that's what it seems like to me. And when that occurs, that will send Bitcoin through a major rally. All right, let's go ahead and read some chat. Really appreciate all of you guys tuning in. I'm going to have to read chat on my phone because it looks like my YouTube studio is giving me trouble. What are we expecting after we hit $25,000? Like 44K? I don't know if we're going to hit that quickly. That's like my end of year price target, and frankly, will probably take even longer than that to see that. I think it won't be until next year that we will see 44K. I think we could see 33. I think 33 is the level I'm looking at. Let's see. Wisely T said, I have to copy paste so Jebb sees at the beginning. Lol, he only spends so much time at the beginning reading chat. Yep, Wisely T is always trying to get first. Let's see. I love how YouTube auto-deletes my long copy-paste chats when I'm trying to ask Jebb a question at the beginning of the stream. Yet all these shills for coins in chat aren't being auto-censored. What the heck, YouTube? Yeah, no, I get that. Yeah, I will try and read your question, Wisely T. I appreciate your enthusiasm. Let's see. Colin McDonald said, came across a chart that if the cycle is the same as previous years, that after the bottom, November 22nd, 1 year later, Bitcoin almost retraces to the same low. Thoughts, Jebb? That happened in that's a good question. That happened in 2015. That was a very different market. That was a very different market. You're talking about this double bottom down here. I know exactly what you're talking about. We dropped down to $167, and then about 230 days later or so, we dropped down to $200 again. Similar thing happened during the last bull market, where at the beginning of 2019, we dropped down to $3,400. About a little over a year later, we dropped down there again. The thing to keep in mind is that this was an accumulation phase and a different market that happened almost a decade ago. There's a lot of parallels we can draw. I personally don't think that that's one that we should draw. Reason for that is because that's not a similar market structure to what we're building right now. It's possible we drop down to 15,000, but keep in mind something about both of these drops. This drop from the pandemic was a black swan event. That drop would not have occurred if not for the pandemic. Bitcoin probably wouldn't have dropped below $6,000. $6,000 was a major level of support that was in play during the previous bull market. We probably would not have dropped any lower than that. We probably would have maybe double bottomed here and then gone into a bull market anyway. Without the pandemic, honestly, guys, Bitcoin probably would have only hit 45K last bull market. A lot of that rally was due to the inflationary properties of the US dollar and the quantitative easing that took place. At the same time, this drop that we saw was not a drop driven by fundamentals in the cryptocurrency space, or excuse me, not driven by market structure. It was driven by FTX. The low for Bitcoin without FTX would have probably been 18.2. Could Bitcoin go to 18.2? Yes, it could. Will Bitcoin go to 15.5? I don't think so, because I don't think we ever should have gone there in the first place. I think the reason we went there in the first place was because of FTX, to be totally honest with you, and the other bankruptcies that happened at the same time. BlockFi filed for bankruptcy down here also and dropped Bitcoin. By the way, BlockFi is talking about liquidating the entire company because they tried to sell the company and their 660,000 accounts, and they don't think they can get enough for it to cover their $1.3 billion that they owe their 50 largest creditors. Whew. Got to be careful with lending platforms, don't you? Seemed like we learned that lesson before. Let's see. Crypto Jebb, can you do a quick TA on Pepe? I don't think you're going to want me to. I'm just going to be totally honest with you. I think you're going to wish you hadn't have said that. But my computer is lagging. I cannot get my... I'm not sure what's going on here. My coin market cap's messed up. I think Safari is messing up on me. Give me 1 second. I will try. But yeah, I'm not going to go on the chart, but I can show you over on coin market cap. Pepe is trading at 0.0001659 right now. This has been the last month on it. It went through a major uptrend at the beginning of the month. Crashed hard, down to 75% retraced. Now it's down here. This cryptocurrency was very famous for a couple of weeks, and now everybody's bored of it. Everybody's bored of it. And because everybody's bored of it and there's no hype, then there's not really any interest in it. People aren't saying, oh, I think it's going to go up. So there's not any interest in it because they're not saying, oh, man, Pepe's about to moonshot. It's not being pushed as hard. So I'm not going to sit here and say that I have any interest in it whatsoever, because I don't. That'd be a lie. Sorry. Told you you probably wouldn't want me to do it. All right. Colin McDonald said, thank you, Jebb. Always respect your view. Thank you. Stimulus checks drove the last bull market. Yes, they did, in a large way. They weren't the only thing, but they were a big part of it. Let's see. I'm about to file for bankruptcy myself. Irvin, I'm so sorry to hear that. I'm very sorry to hear that. If there's any way we can help with that, let us know. Let's see. Let's read a little bit more chat, and then I'm going to wrap it out here. Definitely appreciate you guys tuning in. Good deal. All right, guys. Well, we're going to go ahead and wrap it out here. But before we do, I do just want to give you a couple of tips that might be helpful for you. If you go over to our Twitter, you can find it linked down below. You will find that I put a tweet out yesterday that I think you're really going to like. Check this out. Sign up for LuxAlgo with a yearly subscription and coupon code Jebb30 and save $472.89. 12 months of LuxAlgo at their price of $67.99 equals $815.88 in a year. However, if you get the annual... if you sign up for LuxAlgo Premium annually with the Jebb30 coupon code, it's only going to be $342.99 for the year. So you're going to save $472.89. So let me just simplify that. If you go to luxalgo.com, let me just show you real quick. Luxalgo.com. Come on over here. Go to Buy Now. You can see that normally the monthly price is $67.99. Now, if you sign up for the monthly price and you use coupon code Jebb, then in fact, I'll just show you. Let me just make sure I don't pull up any like bank account information here or anything. Just go to LuxAlgo and type in Jebb30. Here we go. You just hit the subscribe button, hit Jebb30, boom. It's going to be $47.59 a month. You're going to save $20.40 a month. If you do that, you're going to save $244 over the next 12 months. Just by using Jebb30, you're going to get 30% off. You're going to save $244. But if you combine saving the $244 with saving the like $272 or whatever it is from the yearly plan, then you will only end up, let me just show you this again. Check this out. Just give me 1 second. Make sure I don't pull up any bank account information accidentally in front of a few hundred people. That'd be bad. Then you can see the yearly plan, Jebb30 will save you $147. It'll save you 30% off, $489. And you will spend $342.99 for the yearly package, which comes to just under, what was it, $30 a month? Comes to $28 a month instead of $68 a month. So by using the annual plan and by using coupon code Jebb30, you will be saving $40 a month. $40 a month you will be getting back. That is how you get financial sovereignty, by lowering the cost of your subscriptions. So if you were considering getting LuxAlgo, I would highly encourage you doing it that way. Sign up for it using the yearly plan, use Jebb30, Jebb 30, get 30% off at checkout, and instead of spending $815.88 over the next year, spend $372, and you will be saving a ton of money that you can put straight into a trade. So if you do that, not only will you be helping to support the channel, because that's obviously an affiliate link, it helps to support us, keeps the lights on around here. You know, it takes money to run the channel. We have employees and office space and equipment and all of that. And, you know, a family. But at the same time, you're also going to be saving yourself nearly $500 a year by using coupon code Jebb. In fact, it's $472. So make sure to go and check out our Twitter. You can see the math right here. And then you can go to luxalgo.com and hit this link and buy now using coupon code Jebb30 and get that much money off at checkout. You're going to be glad you did. And also, if you haven't already, make sure to go and sign up for Club DeFi's Principles of Technical Analysis, because over the next 24 hours, we're going to be uploading the recording of office hours, and I'm going to be posting the link unlisted, and it'll only be available in the Discord server. So make sure that you go over to Club DeFi, go over to bitcoinacademy.teachable.com, or you can find the link down below to Club DeFi. Sign up for Club DeFi right now and get access to 62 high-quality videos where we're going to teach you everything that you need to know about technical analysis. All the technical analysis you just saw me do, you're going to see how to do it over there, and you're going to learn how to be prepared for that bull market that's coming over just the next 24 months. Let's go ahead and read chat. Really appreciate all of you guys for tuning in. What's today's Bible verse of the day, Crypto Jebb? Let's see. Let me pull one. Let's see. I don't know why, but the Lord just laid Proverbs 12:16 on my heart. The wrath of a fool's wrath is presently known, but a prudent man covereth shame. Proverbs 12:16. And essentially what that means is that if you are offended, the prudent man, the man that is wise, doesn't let everybody know that. Instead, keeps it to himself, and maybe there's a time to share it. But for the most part, he keeps it to himself, and he has forgiveness and grace, and he doesn't let it come between himself and his brother. Because Proverbs also says that an offended friend is harder to win back than a captured city. So you have to be very, very careful about offending people. And sometimes you showing your offense can offend someone. And I'm not sitting here and saying we should all just cater to everybody's offense. We shouldn't walk around offended. It's, in fact, a lot of times it's not right at all to be offended, because we're walking in unforgiveness if we're doing that. But if somebody's offended you, a lot of times it's a better idea to cover that shame. So there you go. Just, you asked me. That's the first one that came to mind. No particular reason, but it might be helpful. Travis Sketches just donated $2. Said, hope your family is well. Appreciate your help. Thank you guys so much for tuning in. Really, really appreciate all of you guys and everything that you do. All right, we're going to go ahead and wrap it out. But before we do, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.